This is Alan Bush with ADMIS. In the stock index futures, we are seeing lower prices early this morning. Looks like one of the main reasons for the weakness that we are seeing is the possibility that the Fed may be a bit more hawkish in their statement after their Federal Open Market Committee meeting. That's to take place next Tuesday and Wednesday. So I think in advance of that meeting, some long liquidation taking the indices lower. We also are building a congestion pattern that has lasted a couple of weeks now. I think once the Fed meeting is out of the way, I think we can see a breakout to the upside from this congestion pattern. Still thinking that the main trend is higher for the stock index futures. Over in the currencies, seeing the pound a little bit better. This after a recent poll showing that the no vote in the Scotland secession vote scheduled for September 18th, now leaning more towards the no camp, so that helping the pound. Also, we are seeing some strength coming into the euro currency this after industrial production in the eurozone coming in a little bit stronger than expected, up 1%. The guess was up 0.7%. Don't forget that this is basically bouncing off of a multi-month low that we did see in the euro currency. Longer term, with the prospects of more easing from the European Central Bank, we can anticipate lower prices for the euro currency. Also in the Japanese yen, more the same, lower prices. We are very close to a 6-year low in the yen against the US dollar. All this pressure linked to ideas that the Bank of Japan will add more accommodation to their banking system, which is bearish the yen from an interest rate differential point of view. So from here, look for lower in the yen. And it looks like the yen has the weakest technicals and the weakest fundamentals of all of the major currencies. And in the interest rate markets, we did have a rather long bull market in the treasuries, mainly in the 30-year bonds. Some correction now with flight to quality longs being liquidated in light of no new problems in Ukraine and the Scottish referendum vote apparently tipping now toward the no camp as far as the latest polls show. So long liquidation there, taking futures a little bit lower than we thought they would get. However, we are very close to some major support areas in the 30-year bonds. Just another 6 or 8 ticks lower is a major gap area that I think will hold. So even though we are under pressure today, I think we can see some recovery later today, especially now with the 30-year bond auction that took place yesterday out of the way. Longer term, still looking for higher in treasuries, even though we have set back now for the last week and a half or so. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.